With skyrocketing housing prices, homeownership may be out of reach for many Americans. Yet, rents are also rising. And on the top of that, mortgage interest rates are soaring as well, hitting their highest level in more than 3 years. So, how do you know if you should own a home or rent it? Hi, I'm Annie Paulus, Realtor with Keller Williams St. Pete. And if you have been thinking of buying a home and wondering if it is a good idea or not, then today's video is intended to give you some clarity on exactly that. Unsurprisingly, many home buyers are left wondering this very question: is buying a home still worth it? The short answer is yes. If you are financially ready, buying a house is still worth it, even in the current market. Experts largely agree that buying and owning a home remains a smarter financial move than renting for many. If you are not sure whether or not you want to rent or buy right now, it's better to make your decision based on your personal situation and your personal needs. When it comes down to the numbers, it is generally more affordable to own a home, but the gap in affordability is shrinking as interest rates rise. If you are on the fence about a home purchase, here is what you should consider. Number one, timing is everything. Before you consider buying, think about where you are in your life. Are you looking to settle down somewhere for a while, or will you be moving in a couple of years? The general rule of thumb is it takes about 5 years to 7 years in a home to recoup the purchase cost. That includes closing costs, which add between 2 and 5% to the purchase price. If your home needs are going to be pretty consistent and pretty stable over the next few years, now may be a really good time to buy for you. If they are changing, you may want to consider renting so that you have the flexibility to move. Number two, check your finances. Ask yourself if you are financially ready to own a home. That includes having enough emergency savings in case something happens in your first year of home ownership. You should also have enough monthly income to afford mortgage payments, taxes, and insurance, as well as extra monthly expenses like utilities. Check your credit report as well, since your credit score has a direct bearing on the mortgage you will get and interest rate you may pay. If you see any mistakes, get them corrected before you apply for a loan. If you can't afford the monthly payments, continue to rent and keep saving money if home ownership is your ultimate goal. If high rent prohibits you from saving, consider downsizing or making other big lifestyle changes so you can start putting more money aside. Number three, know your numbers. It is a good idea to figure out in advance what you can afford if you were to purchase a home. This way, you have boundaries set around your home shopping. You don't want to waste your time looking at homes that you can't afford, or even worse, put an offer on a home and get accepted only to know later that you cannot finance it. Also, keep an eye on rising mortgage rates. The Federal Reserve has indicated that it will increase interest rates in the months to come. That's why, if you are currently in the market to buy a home, it may be better to do so now before rates and prices climb higher. To wrap it all up, here are a few things to keep in mind. While home prices have increased rapidly over the past 2 years, renting isn't always a more affordable alternative. Rent prices have been skyrocketing in many places as well. That impacts how much you can spend on your basic life necessities like groceries, gas, and utilities. There is also a persisting shortage of rental supply in many markets, meaning you may have an easier time finding a home for sale than a rental. To keep things simple, if your mortgage payment will be less than you would pay in rent for a similar house, you should probably go ahead and purchase a home. However, do keep in mind that comparing rent payments to mortgage payments might not be an apples to apples comparison. What I mean by that is what you can afford for, let's say, $1,500 monthly rent might not be the same kind of house in a similar neighborhood that you would get for a $1,500 monthly mortgage. To know if it is more expensive to buy or rent in your market, you would need to do some homework and calculate the math. Calculate the amount of your monthly mortgage payments based on your research of the likely sale price compared against the amount of your expected monthly rental payment. Also take into account costs such as property taxes, maintenance costs, and cost of capital. It is these costs that we need to compare to the rent. Most people suggest using 1% of the property value per year on an average as the maintenance cost. Remember that mortgages are fixed, rents are not. Keep in mind that if you choose a fixed rate mortgage loan to finance a property, your monthly principal and interest payments will stay the same throughout your loan's term. Though keep in mind that property taxes and homeowners insurance rates can increase over time. In contrast, rental rates are not predictable. Normally, a tenant signs a 1 year rental contract, and at the expiration of the contract, the rental rate will probably increase. Currently, only 5 states and the District of Columbia have rent control laws in place. If you expect a job relocation or a move in the next few years, it may be more advantageous to rent than purchase. That's partially because you will incur closing costs on a home purchase, which may equal 2 to 5% of your borrowed amount. It will probably take a few years to recoup these costs, which requires staying put. If you are still undecided about buying versus renting, then consult with an experienced realtor and mortgage lender who can help you explore what options are available at your budget and shine a light on your financial situation. Also, carefully research the state of your local market. If there is an influx of jobs, there will probably continue to be more buyers and sellers, resulting in continued growth in home prices. In a less robust market, it might be smarter to continue renting in anticipation of a possible market correction and lower home prices. The bottom line, provided your finances are in order, your job is secure, you can afford the monthly payments, you're working with a skilled real estate agent, and you will remain in place for at least a few years, buying a home will not be a waste of money. If you liked today's video, you might also like my video on pros and cons of buying a house. As always, remember to like this video to help this video with the YouTube algorithm so that more people like you can find it, and also subscribe to my channel to learn about all things real estate. I'll talk to you soon. Bye for now.